Good afternoon, traders. This is Christian from Traffic Trade Group, and this is your end of day market recap for what is today. Today is Monday, August 5th, coming to you from downtown Manhattan, where it's a bit sunny outside. So sorry, it looks like some of that sun is in my face a little bit, but where to start with these markets? And I'll try to keep this video a little bit short. I've been giving some longer videos. I tend to give some longer videos when the volatility is a bit higher. So Friday's video was longer. The weekend member video was a bit longer than usual, but clearly, major gap down today, major volatility. Some of these moves in international markets, probably, and I don't think I'm going out on a limb here saying this, but they probably need to chill out a little bit. It's a huge move. One of the biggest moves that I've seen, and I don't know if that's a record move to the downside with the Nikkei down over 12% overnight, but even further when you look at the other carnage that happened. And that's a good way to describe it. In some of the other international emerging markets, the Kospi, for example, which is South Korea, down 8%, Taiwan 8%. I mean, these are not small numbers. So, that kind of helps put things, I think, a little bit into perspective for the day. You're looking at what the Nasdaq did what the Qs did for the day, which was down about 3%. Looks like Nasdaq was down 3.4, S&P down 3%, Dow down 2.6. So, obviously a pretty big volatile day when you're looking at all of these. But with this volatility and, what did we hit today in volatility? We hit like a 65 or something like that. 65 VIX. I mean, that is nothing to sneeze at. That's one of the biggest moves that I've seen. I kind of said this earlier for those who are, haven't been trading as long as I have, or even half of long as I've been trading for. This is very good for you. These are really good times for you to learn what happens when volatility kind of comes in. And it's kind of weird because the times that I've seen volatility, and I think during the 2008 situation, the credit crisis, it was kind of a buildup for a while. At least it kind of felt that way. And then, it just kind of, advanced the VIX all the way, advanced to about a 90, which, again, it it took a little while to get to. So it was a sell-off over time, but regardless, like a 65 is not that far away considering just how fast things are moving. All of a sudden it was 50 around like 9 o'clock this morning. And then it peaked out, I think before the open at around 65. So is that the end of the volatility? Will we begin to see this come in a little bit? Well, I mean, look at where we closed, and we closed at 38. That's still pretty high. I think at one point today did we get below 30? We got around to like 30, a VIX of about 30. And my thought was if we continue to kind of come down from that, and break below a 30, like that's pretty good progress. Now, again, it's good progress to see us come off the highs like that, but as I've been saying over the last like week, is that you just need a little bit more time, right? You don't need to figure all this out. And I know everybody wants to try to figure this out in a hurry, and get signals and kind of go from there. But I think one of the things that you have the luxury of is not getting involved if you don't want to, right? And controlling what you can control. I mean, that's the main thing with these markets. Like, don't let these markets kind of push you around. You can at any time, get out of positions and so on and so forth. You don't have to get right in the middle of all this. So yeah, I mean, here's 2008. And like I said, it just took a little, I think we were hanging around the 30s for a while, and then it went up, and then volatility it took a while to come back down. But again, I mean, I'm really surprised that we've gotten to, considering what I've traded with in my institutional career in 2007, 2008, 2009. Back in those years, of course, I traded longer than that, but just talking about heightened volatility. And then, of course, what we saw with the COVID situation too, where it was a much dire situation, and the VIX hit almost a 90 then. So, those were crazy times. And I was giving the comparison of what I normally do, because 2020 wasn't that long ago, about, waiting for buyers to come back in, that helped me a lot in 2020. Here, so here's the weekly chart, and of course it's a developing weekly bar, but we've got kind of, I don't want to say a similar situation, but we know that the price is below all these moving averages, which just generally is a sign of weakness. Now, it doesn't mean that you have to stand still and not do anything. Right now you're getting pretty good day trading opportunities, right? If you bought around the open today, look at what the markets did after that. The Qs advanced 2.5% from the open. Again, just kind of shows you like how big of a move today was. Still down 3% on the day, but it gave you a chance to rally. It looks like the Dow didn't do anything. It was mainly the Qs. IWM also went up to over 2% from the open, and SPY only went up about 1.1%. So not that big of a move for SPY, and even a lesser extent for the diamonds after the open. But there you have it. And even with the volatility finishing way off the highs, that's a VIX that's still advanced 65% for the day. So what did okay today? I mean, what rallied hard? I mean, these crypto stocks are crazy volatility wise, and there you go. Like, that's the trade. Like, if you want to be in there day trading, this is the best environment for it, because of the if you're a really good day trader, because of the volatility. You don't normally see these moves, but that's what this market is until it gets, probably with the VIX back below like 25, even better 20, then it's a more swing trading environment. Now, doesn't mean, of course, like, it all depends on your time frame, and what kind of if you're a trader, what time frame you trade on, or if you're an investor. If you're an investor, you have to like lower prices, for longer term, right? And there's nothing wrong with adding, in my opinion, there's nothing wrong with adding risk on these dips. They're usually good buying opportunities if you've got a long enough time horizon. Even though you don't really get any major confirmation that the bottom is in, you spread this purchase out long enough. Or if you're, if you are buying in your 401k plan like twice a month, that type of thing, or your IRA once a month or something like that, programmed like that, you do want to be buying lower prices, right? So that's the positive of this situation. And a lot of it too is because of a big overcrowded trade that happened with the yen and the carry trade. So again, it's going to make things really bumpy in the short term. We also have political and geopolitical unrest that's happening too. So it's a complicated market, and I think I think the market, bad timing, of course, for this Buffett situation where he reduced his stake in Apple. By the way, I don't really think that's such a big deal. Apple, you have to remember, he didn't do this on Friday, right? It takes a while to unload a position like that. But, here's Apple checking back to the top of the value area. But from where this was, like, people, again, like I mentioned this, that it seems like a lot of folks are angry. You got to do what you got to do. Like, you shouldn't be following these people like to a T. You've got to develop your own trading system, right? And Apple wasn't that far from the highs. And I even tried to trade Apple on Friday. And what my thought is, so if you go back to Friday and what this was doing after earnings, it did not break the value area for the week. So I'm sorry, I know that's tough to see on this chart, but I tried trading this. And, my comment is, I don't mind doing a little bit of swing trading here, but if the position doesn't work right away, odds are I'm not going to stay in it, because there's just too much volatility on the tape right now. So all in all, this was not, this recovered pretty nicely, and it's still holding that top of value for the year, right? Nice check back, by the way, into the top of the value area. I'm going to take a screenshot of this really quickly in this video, because I want to send that chart out. But that yellow block right there is the value area for the year, right? And we're still way above there. Here's the Qs, by the way, on the weekly chart, we're still decently above there. Here's the daily chart. I talked about, one of the things that I wanted to see today, and let's do NASDAQ futures, so it's a little bit more continuous. But we basically using for the last hour, I'm sorry, last hour, this is hourly chart, but for the last couple of days, we've been kind of, we've been straight down. There's been no question who's been in control here, the buyers or the sellers. The sellers have been, right? And that's where I use these moving averages to say, hey, price can't even get above this short-term 5-period moving average. Now, today it changed a bit, right? And we had a little bit of, we had some follow through up until about 12 o'clock, and then we kind of moved back. And one of the things that I said at that time, I put out a midday video. I said, I don't think we're out of the woods here, but if you manage to make some money on this move, make sure you're putting some of that in your pocket, right? And not getting, not going for leaps and bounds, and thinking that the market's going to recover all the way. I think it's going to, again, I don't know, but I think it's going to take some time. So, that means taking targets and being flexible and being able to reload if you are doing more than just day trades. Here's IWM too, move all the way down. Look at where this also landed. Basically, there are Russell futures, I think, are better here. Here's Russell futures, and also coming all the way back into the top of the valuary for the year. What sideways? I mean, obviously giving you ranges to trade, but overall this thing has been really sideways this year. All right, so that that's a couple names. Here's our watch list. I did not put a lot of names on our watch list for this week, but notice I've got more stronger names on here that more stronger names earnings wise. So one name I did not put on here just because I think this is a tough name to buy for me anyway, but this is Dash. Look at the follow through on Dash. And Tyler Technologies, which had a really strong earnings report. Look at this thing hold in here. GoDaddy was another name that had good earnings, not bad. Do you see all the volatility that happened in this name? No, you don't. So not too bad. A couple more speculative names. ASTS is holding in there. RKT, which I see a lot of people talk about, that had a decent day too. Some of these names are not in the indices, so it helps because they're not getting moved around. Being sorry, I'm not going to say one word. I didn't want to say that word, but they're not getting like pushed and pulled by if they're in an index, as many names are doing right now. TMDX is another name. This is a name I got long a little bit after the earnings. I've held on to it. It needs a little help in here. It did not close above the valuary, but for now I remain long. Also, one of my favorite names has been over the last month or so is this FTAI, which I added close to the low of the day. Just held right around that 50-day moving average. I may have to dump the rest of it, but I was able to take a couple targets on my ad today. Also, NVIDIA. Then I said I would keep this video a little bit shorter, but also took out a downside VPOC. Does that mean the name's going to go right back up? No, it doesn't necessarily mean that. This is a challenging looking chart to me. There's going to be a lot of overhead supply, but it had a nice bounce. So I'll leave it there for now. We'll see what the overnight market. Let's see if Japan kind of chills out a little bit, or calms down, I should say. And then, maybe we can go from there. But one of the things that I said, there's been a lot of concerns with the market. The carry trade was one of them. Like the dispersion trade has been another one. And, but, and then last week, all this worry about recession. Well, and I had mentioned a couple of times in these videos that the ISM manufacturing, we're not really a manufacturing country. We're more of a services country, and that number came in hot, not hot, but better than expected. And good news is good news right now, right? It just shows that we're not in a dire situation. The ISM services expanded. It's above over 50. Now, again, it's a little bit of stale information, but ISM is much more of a leading indicator. Same thing with PMI data, which was also pretty good today too. Right. These things are more leading. Again, they're a little bit, there's always going to be some lateness to them, but they're much more leading than things like GDP or employment data, the unemployment rate. These things are leading indicators and not that bad. So I think that my opinion is you getting through this volatility, I think, is paramount in protecting your capital. But ultimately, there will probably be, this will probably just be another buying opportunity once the dust settles. All right, guys, have a great night. See you tomorrow.